Hey everyone, welcome back to Corporate Decoder, the place where we decode the mysteries inside company filings. Today we're looking at Gulf Resources and their latest report. It seems like they're getting ready for some big changes, and we're here to break down exactly what that means for investors and the company itself. Before we dive in, if you like getting clear, no nonsense explanations of what really matters in corporate reports, make sure you hit that subscribe button. And if you want to connect with other people who love digging into these filings, join our Discord community linked in the description below. Alright, let's get straight into it. This report is from Gulf Resources, and the earliest event they're telling us about happened on September 12th, 2025. This is a current report, meaning something significant has happened that they need to tell the public about right away. The key thing to understand here is that this is an 8K form. Think of an 8K as a company's way of announcing major events that shareholders and the public should know about. It's not like their regular quarterly or annual reports. They give a broad overview of everything, and 8K is for specific important news. Now, what kind of company is Gulf Resources? Well, they're traded on the Nasdaq Capital Market under the ticker symbol GUR. Their common stock, which is the basic ownership stake in a company, has a very small par value, which is just a nominal amount used for accounting. The real story in this particular 8K is about what happened at their annual meeting of stockholders on September 9th, 2025. That's where the shareholders get to vote on important company matters. One of the most critical things at any annual meeting is the election of directors. These are the people who lead the company and make the big decisions. Gulf Resources presented 7 nominees for their board of directors, and the results are quite clear. Let's look at Xiaobin Liu. Out of over 9 million shares voted, about 6.1 million were cast for his election. That's a strong majority, showing good support from shareholders. He also had over 960,000 votes withheld and another 3 million broker non-votes. Broker non-votes happen when a broker holds shares for a client but doesn't receive instructions on how to vote, so they can't vote those shares. Ibo Yang also received significant support with just over 6.1 million votes for. Similarly, Dongshan Wang, while still elected, had a slightly lower for-vote count at around 6 million, with more shareholders choosing to withhold their vote compared to others. Sheng Weima and Shi Tongxiang, along with Chang Liu, all saw very high approval numbers, with over 6.1 million for votes each. It looks like the shareholders were pretty happy with the proposed slate of directors, as all 7 nominees were elected to serve for a year until the next meeting. Next up was the ratification of the company's independent auditors. This is basically shareholders giving a thumbs up to the accounting firm that checks the company's financial books. Gulf Resources appointed GGF CPA Ltd for the fiscal year ending December 31st, 2025. The numbers here show strong approval, with over 8.2 million votes for and only about 1.9 million against. This suggests shareholders trust the auditor choice. Now, here's where things get really interesting. The shareholders voted to approve a reverse stock split. What is a reverse stock split? Imagine you have 10 $1 bills, and the company decides to exchange them for one $10 bill. The total value stays the same, but you have fewer bills. For a company, this means reducing the total number of outstanding shares. Why do they do this? Often it's to boost the stock price. If a stock is trading very low, say at $1, it might not look attractive to big investors, or might risk being delisted from an exchange like Nasdaq. By reducing the number of shares, the price per share goes up, even though the overall value of the company hasn't changed at that moment. Gulf Resources saw strong support for this, with nearly 8 million votes for and about 2.1 million against. This move signals they're aiming for a higher stock price. Following that is the approval of the Gulf Resources Inc. 2025 Stock Incentive Plan. This is a plan that allows the company to give stock or stock options to its employees, managers, and directors. It's a way to incentivize them to work hard and stay with the company, because their rewards are tied to the company's success and stock performance. This plan was also approved by shareholders, with about 5.9 million votes for and around 1.1 million against. The nearly 3 million broker non-votes here is notable, meaning a good chunk of shares didn't have a vote cast for 9 million votes for and around 1.1 million against. The nearly 3 million broker non-votes here is notable, meaning a good chunk of shares didn't have a vote cast for this specific item. Finally, shareholders also voted on the compensation for the top executives, often called say on pay. This vote is usually advisory, meaning the company doesn't have to follow it, but it's a way for the shareholders approved a compensation. They received over 6.1 million for votes and around 981,000 against votes. Coupled with the broker non-votes, this shows a majority of the voting shareholders are okay with the executive pay package for now. This filing is a snapshot of key decisions made at Gulf Resources' annual meeting. The election of directors and auditor ratification are standard. However, the approval of the reverse stock split is a significant strategic move. Aimed at improving the stock's market perception, the stock incentive plan is also a common move to retain talent. Looking at the overall picture from this filing, Gulf Resources seems to be taking steps to manage its stock price and employee motivation. The election of directors shows confidence in current leadership. The reverse stock split is a clear signal that management wants to lift the stock price, perhaps to meet exchange requirements or attract more institutional investors. This can be a double-edged sword. While it can make the stock look more substantial, it doesn't magically improve the company's underlying business. If the company's performance doesn't improve, the higher stock price might not last. A key risk to watch here is how the market reacts to the reverse split. If the company doesn't deliver on improved performance or profitability, the stock might continue to struggle despite the price manipulation. Shareholders should keep a close eye on future financial reports to see if the benefits of these decisions translate into actual business growth. So what's my take on Gulf Resources based on this? They are actively trying to present a more favourable image to the market through stock actions. The results of the votes indicate shareholder agreement with these strategies for now. The real test will be in their future financial performance if they can capitalise on the potentially improved stock perception and use their incentive plan effectively to drive growth. These moves could be positive. However, the risk remains that without solid underlying business improvements, these actions are just surface level changes. That's our update on Gulf Resources' latest filing. What do you think about their plan to do a reverse stock split? Does it signal strength or desperation? Share your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up and don't forget to subscribe for more insights into the world of corporate finance. And remember to join our Discord community for more discussions. The link is in the description. Thanks for watching and we'll see you in the next Decode.